Hello and welcome. We are in conversation with Dr. Sanjeev Sanyal, Principal Economic Advisor to the All Critical Finance Ministry. So thank you so much for giving time to CNBC TV 18. The first off, kind of a relief rally on the exchange rate as well as the markets. Probably it's a bit early to ask this question, but nevertheless, looking at the global uncertainties, do you think that trend is going to continue? But vis-a-vis the domestic situation, do you think the worst, probably to an extent, is over as far as the domestic economy or the domestic indicators are concerned?
Well, I'll say that, look, we are in an environment where there's ups and downs in international markets. We have problems with high oil prices, rising international interest rates, and of course, the trade disputes. Nevertheless, I'm pleased to say that in that context, India's GDP growth remains rock solid. We had an assessment of our growth trajectory just very recently, just 2-3 days ago, which the IMF published. And I'm pleased to say we are almost doing 7.5% this year and something similar next year, making us very much the fastest growing economy in the world. But more importantly, this growth rate is being achieved at a time that the IMF has cut back on the growth projections for the world, as well as specifically for both the US and China. So I think we are doing very well as far as growth is concerned. On macroeconomic stability, yes, we have had ups and downs in the exchange rate. But again, inflation has done very well. So, the thing that we set up the Monetary Policy Committee for was to target inflation. So from a macro stability perspective, the inflation rate is pretty much a bang in the middle of our range. So as far as stability and growth are concerned, we are doing very, very well. So yes, there is an international uncertainty, but we are steering it reasonably rock solid.
So the question here is basically on the exchange rate and the markets. I mean, as I just said, some bit of a relief rally today probably. Do you expect this trend to deepen further? Because that was the indication that was being given by government yesterday very clearly. How long do you expect this to last? Vis-a-vis what's happening globally, any comments on that?
First of all, governments and policymakers don't target financial market levels. All that we really care about is making sure that they function in an orderly fashion so that business happens. So, it's not my business to target the stock market. Nevertheless, I would say that there were uncertainties, particularly relating to NBFCs and others, and you've seen that we took fairly quick action, both with IL&FS, and then, of course, you saw the action coming in from National Housing Bank as well, providing funding for the housing finance corporations, and then we are pleased to see that many banks have also taken it up and coming into the market to pick up, attractive assets. So I think the somewhat frictions that you were beginning to see in the credit markets is beginning to ease off. So that is a good sign. As far as the exchange rate is concerned, yes, it dipped a long way from where it was at the beginning of the year.
It was a heavy depreciation.
Yes, it is definitely a heavy depreciation. It's still, today it may have bounced up, but it's still a long way down from where it was in the beginning of the year.
Right.
But as I keep saying, you have to keep it in context. We have depreciated against the US dollar, but against most of our competitors and trading partners, we have been reasonably stable for many years. And in any case, I would argue that at the current level, the rupee is very, very competitive. And so if I take a medium-term perspective of it, I would be not very surprised if it appreciated from here.
Okay. So some bit of appreciation we have seen today, but expectation is that that trend may last for at least some time?
As I said, the Reserve...
Not asking about the levels.
The Reserve Bank manages this on the basis that the market finds its own level. And it has allowed for a large correction, but meanwhile has also made sure that the ammunition of foreign exchange reserves has been largely protected. So we have continued to have 400 billion worth of reserves, despite a lot of uncertainty in the international markets and so on. That has partly been because we felt, and the Reserve Bank quite correctly, has allowed for the market to do the adjustment. But now that the adjustment has happened, I would argue that we are now at a level where the rupee would be considered very competitive.
Correct. Okay. Also, another thing that was discussed was that probably, we are looking at $85 to Brent as the outer limit. This is what we have been indicated that analysts are projecting, more or less, would this be the number that government is factoring in as of now, and we are within that kind of range to speak about?
Well, I'm not in the business of predicting oil prices.
Sure.
It has obviously sharply come off in the last couple of trading sessions. But it is something we watch very, very closely, obviously. We are an oil importing country. And so this is something we have to respond as the situation evolves. It is not like, there's a particular level that we target or, forecast.
Agreed on that, but any discomfort number, 90 plus?
No, the higher...
Not trying to get it out from you, but just trying to understand.
The higher it is, the more difficult it is for us. I mean, as an oil importing country, we want it as low as possible. Zero would be better.
Right. Okay, very quickly, sir, also in terms of, the clarifications that have come in so far as the upstream and the downstream oil sector is concerned, we saw how the stocks got hammered, when the fuel price relief was announced. Now, we're given to understand that 6,700 odd crores was a hit that OMCs had taken, notionally or actually in terms of absorption of that 1 rupee. So now with somewhat rupee stabilizing somewhat and somewhat the crude coming off from its highs, when the price should actually come down, do you expect this benefit to actually be passed on to consumers, or do you think that given the market dynamics they would like to kind of make up for what they had been asked to cut?
So let's be very clear, we remain committed to the deregulation and long-term reform of pricing that we had done. So, of course, at some point, and I think the finance minister right in the beginning had made it clear that we had taken certain short-term measures given the spike. But yes, I mean, obviously, if the situation goes back to something more tolerable, then, we will take necessary steps at that point. But let these things, let not one day of stability begin to lead to changes in our approach.
No, my question was that, if this trend remains for some time, will oilcos, kind of absorb that and not pass on the relief to consumers?
So I'm not in a position to comment on it. We will obviously respond. If the situation improves, we will do things that situation allows us to do. But as I said, long term, we remain committed to the deregulation reform that we have done over many years. So it is not that we took the recent measures lightly. We did it after a fair amount of thought. And, we will revert to a longer term approach as and when the situation allows us to.
Okay, and government's intention also is very clear of not involving the upstream companies, at least as of now, for any subsidy sharing mechanism.
I am not the right person to discuss this. You'll have to talk to somebody else.
Cool. So coming back to the macros, we are given to understand that probably some internal estimates are already indicating a CAD of 2.8% by as early as December this year. What's your view on that?
See, if oil prices have
Would
gone...
this be a correct estimate to go with?
Well, I'm not, that's an estimate you came up with. The point is that yes, certainly it would not be unreasonable to expect that the CAD will have gone up a little bit from last year, given the oil prices. But I think we are very, very comfortably covered by the foreign exchange reserves. And if there are financing requirements, we will look for whatever is necessary.
Financing requirements, we look forward to whatever is necessary. So what are the options right now? Because we are very clearly given to understand that, for example, the NRI bond, which will be a big step, that continues to be on the table, and that will always be an option government will keep, but probably not decided yet.
So you have an evolving situation. International markets are moving in various ways. And so we will exercise and look at every option that is available to us. But because we have the cushion of reserves and there is no real pressure on economy because the economy is growing, inflation is well behaved, so we have some space. So there is no need to do anything in a real rush. We will, as and when the situation requires it, we can evaluate the situation at that time and take the decision, as I think the DEA Secretary had just mentioned.
Yes.
These are things that can be put in place quite quickly. We have done them many times in the past. So if the situation warrants, we will do it.
Right. Any other option of raising money from abroad, sir? This could be one of the mechanisms to try and
There are many options. I mean, I'm not going to list them all out. As I said, these are things that can be done quite quickly. as long as we maintain overall economic stability, which happens to be the case. So then all these options are open to you. So that is the key thing. Make sure growth remains reasonably strong, inflation controlled, and the fiscal numbers remain in reasonable control. So then, and of course, the financial markets keep functioning. The bank cleanup does not get derailed and continues with the IBC process. So get the basics right, and then whether it's international investors or domestic investors will then give you opportunity to finance in various different ways. Exactly how we go about using those opportunities depends on that moment and our response to it.
Right. So one more small question here. In terms of the dollar window for OMCs, that was also talked about. 2013, RBI had done it, but government opted for the ECB route, in terms of the working capital. So the dollar window for OMCs, is that a closed option as of now? Though of course, crude has come off its highs and the exchange rate seems to have kind of stabilized.
Nothing is ever closed. If an option is there, it is there. It can be exercised whenever necessary.
But was there any, opinion from RBI that they may not be in favor of that?
No, I mean, these are things that we discuss all the time, and options are always there.
Right. So you also mentioned that, RBI has, reserved its ammunition. For example, there was no rate hike in the last MPC. But was a rate hike really expected? Because that happened the third tightening consecutively.
Well, I'm not in the business of expecting or not expecting.
So what do you mean by reserving its ammunition?
I meant that in terms of the fact that they still have 400 billion worth of reserves. And that is a large amount of reserves by any standard. So that remains the case. And I think quite correctly, they did not expend it defending indefensible levels along the way. So although they did expend some reserves to slow down the correction, but I think they took the view, which is I think correct, that the markets were adjusting very fast. Many of our competitors and trading partners have already seen large corrections going back starting last year when we were appreciating. So they allowed for a much quicker correction that maybe normally they would have gone for. But in that, they did conserve. We still ended up. We still have $400 billion reserves, which gives us basically the options and the time, if necessary, if we want to do other ways of financing, we have the space to do it.
But a lot of outflows have also happened.
No, I mean, the reserves have already reflected. So
30th November is Q2 GDP. Just a quick line. Any expectation?
No, I'm not in the business of forecasting these numbers. When you get it, you will see it. Right. I think it will be a reasonably strong number.
Right, Dr. Sanyal. Thank you so much.
Thank you very much.